Hello traders, Cousin Benny coming to you from theclosingprint.com on October the 11th, Sunday. In this video we're going to cover the indices. You'd have to be living under a rock to not have seen the S&P 500 bolt higher by 3.26% last week. The comp 2.61% on the week, and the Russell 2000 plus 4.62%. Tick and tick Q for both the New York Stock Exchange and the comp, both crossed higher. NYMO and NASI, similar. We had positive breadth with a summation cross on both. However, we did hit extreme levels, so that is somewhat bearish. Breadth, we had an MAD, major accumulation day, on Monday, plus 150%. Remember, a major accumulation day is a day where we see plus 90% up volume versus down volume. And we had 2 days plus 50%. CPC, the put-call ratio, is near the red zone at 0.87. That could drop further. We have the New York Stock Exchange Composite at its upper bands. Currencies, US dollar is at the lower bands and somewhat weak during last week's session. Versus the yen, which is also sideways with no signal there. If we see higher prices on yen, you can anticipate lower prices on equities. Bonds, TLT is holding the 20 and the 50 MA. Stochastic is less than 20 and could turn shortly with MACD above the zero line, and we saw a MACD cross. So that could be more bullish for bonds and bearish for equities if that plays out. Crude oil, pennant breaking higher, copper is higher, and gold is higher as well. Sectors, they're all overbought. We'll show you that. And the setups, we'll look at some IBD 50 setups through the lens of the 10E Stow MACD setup, which we uploaded a video into the premium section this weekend. So for your new traders who asked this week where the content resides, the book is here and also on the premium page. And note the address. Okay, this is where you purchase the book, and then of course the videos are here under this tab, Premium Videos, and we uploaded 3 this weekend: the 10E Stow MACD setup and box trade, as well as the Bollinger Band Keltner TTM squeeze and the Kirby using volume by price. So all 3 of those videos are now uploaded in addition to the opening range strategy video. Looking at SPY over the past 3 months, we can see very clearly this Kirby that we're dealing with. Prices moved right into that level. We put in a doji on Friday, and we have this little appendage that traded over the past few trading sessions. This wasn't here when this price action was building. This was the high on Fed Day, Thursday, a month ago. Now we see Stow in the overbought zone. We had nice volume. MACD's looking positive, and we have tick cumulative showing something of a change in direction, but it is positive nonetheless. Zooming out to 8 months on SPY, we can see a different picture. We have these lows right here that we saw back in the summer, these lows again back in spring, and we have this zone right here to deal with. We have 202.51 overhead, which was this low right in here, and we have an upper level which starts this Kirby right in this zone right in here. So we do have overhead resistance. We made it through the 50 period moving average. We have the 10 EMA moving higher very rapidly, but we do have that doji to deal with on Friday with NYMO at extreme levels plus 102, which suggests that we could see a little bit of sideways action, best case scenario, or we pull back, say, to the 50 period moving average and then move higher. We are bullish because we do see MACD moving above the zero line. Stow is overbought. We could see it in bed like we did back here in the spring and also here in July. But we are in a position where we could see a small pullback or a flag at this point. Looking at the NASDAQ Composite, we can see how this volume by price congestion has built up here. We start in this zone, and we're already starting to see resistance levels with the 50 period and 200 period just overhead. So comp isn't out of the woods yet. We could see a little bit further push higher, nice volume. MACD's drifting higher, but not above the zero line, and we're overbought. So that's something to consider. NASDAQ A50R, the number of stocks trading above the 50 period moving average, has made it up to 58. We're starting to get in this zone where we could see a little pullback first before we move higher into year end. The Russell 2000 made it through this resistance level that we pointed out over the last couple of weeks. We dropped down below that level, pushed above, lost it again. The descending 50 period moving average was overhead. We're sitting right on that area now with a spinning top, sort of a shooting star, not much of a predictive candle here. And we have MACD and STO in a position that we could see a little bit of a pullback. Note the histogram starting a shorter bar on Friday. Nothing much here. We could see a flag here as well, just like on the SPY and also on the NASDAQ, and then resume higher into year end. Right now, more bullish than bearish, so we're looking for higher prices into year end and March, April before we start to see any kind of pullback or distribution. This is the S&P 1500 new highs minus new lows percent, the high-low percent. Note we went on a buy signal last week. We pointed that out on Monday. Had a nice little move higher above the histogram, above the zero line. This is just a histogram reference of the same new highs minus new lows. So that continues to move higher. We're at the upper bands, and we'd expect to see at least a minimum of a sideways consolidation and then perhaps move higher. Note that the lower band and the upper bands are spreading apart. That means we're going to see continued acceleration. If this lower band starts to turn back up and this one continues to move parallel, that just means that we could see a grinding action higher. And note the overhead resistance levels over here that we have to deal with, around 475 on the S&P 1500 composite high-low percent. And to finish off, this is the New York Stock Exchange composite with Elder Impulse enabled. Note the resistance levels overhead. We're through the 50 period moving average. MACD is starting to move above the zero line. That's bullish. And we have our up-down volume. We noted the 150% major accumulation day on Monday and 2 days at 50% on Wednesday, Thursday. So this is looking pretty bullish. We just want to see a flag perhaps, because we did move on the S&P futures 150 handles higher off of this low. Here is tick cumulative for the New York Stock Exchange composite. Note we have a cross up and the angle is starting to change somewhat. This will change intraday. In addition, we want to see tick cumulative for the NASDAQ, which also turned up last week. Note where price action is. VIX continues to move lower as well. We haven't hit the red zone yet. We have a ways to go. We closed at 17.08. However, the VIX to VXV volatility index front month to 3 month is in the red zone. We're closed at 0.86, so we could see a little bit lower, but 0.825 would definitely get us more bearish in terms of a little double top here and previous price action that we're dealing with. Breadth, we saw NAMO at extremes as well. Note the levels here where we had support that we lost. Support becomes resistance now. We've tried to get through that level. This is the second time. No reason why we can't do it. The summation index is moving higher. We did have a cross early this week, which we pointed out in the Sunday video, and price action just moved higher. Now remember, the NASDAQ is a little bit behind in terms of the S&P 500. In terms of the S&P 500, we did have this peak that we mentioned on NYMO, plus 102 intraday. It closed at an extended level. However, it did back off at 88.73. Summation index indicates we could see perhaps higher prices, but I would be looking for NYMO to trail off a little bit. It could stay positive like we saw back here in October, November, when price action crossed through the zero line and stayed up above the zero line for almost an entire month. So keep that in mind. CPC, the put-call ratio, is also near the red zone at 0.87. It could drop a bit further. However, the New York Stock Exchange Elder Impulse is showing that we're at the upper Bollinger Bands. This just means we could see some sideways action, as we mentioned previously. The NYSE Composite, high-low percent. Note that that's moving higher. If we get above 50, this could really get rip-roaring. I do see some inflection possibly. This indicator doesn't usually go straight up for weeks at a time. So I'm anticipating that we could see a little bit of a rollover, some consolidation on the indices. We have this nice little Kirby that we pointed out, and this overhead resistance level. Maybe we pop up to that level and flag out before moving higher. We have the 200 period overhead as well on the New York Stock Exchange Composite. New highs minus new lows is a different way of looking at it. We're above the histogram. We haven't been above it for some time, back in July and again earlier in May and June. The moving average is moving higher, so this is somewhat bullish. And again, the New York Stock Exchange Composite. New York Stock Exchange Advanced Decline did make a new high. It broke above this level here. And we're having a little bit of resistance in this zone right now. As we mentioned previously, the US dollar had a weak performance over the past 5 trading days. We have the 10 EMA crossing down below the 200 period moving average, and we have the sideways range that we could see possibly 93.25 and stay within this range. Note the Bollinger Bands are fairly narrow. Slow still continues to move lower, as well as MACD trailing down below the zero line. And as we mentioned earlier, the Japanese yen is moving sideways. No signal here, really. If this were to move higher, that would be bearish. You can see the green area in the background is the New York Stock Exchange Composite. When the yen bolted higher, that was the lows that we saw in late August. So with price action on the yen moving higher to sideways, we want to keep an eye on this. If it moves higher, that's bearish for equities, and lower would be bullish for equities. Switching gears and looking at bonds for a minute, this is the 20-year Treasury bond, TLT. Note we're right at the 20 period and the 50 period moving average. Slow stow is oversold and could turn back up, and MACD could turn up as well. Histogram is headed toward the zero line, and it looks like we're going to cross if we haven't already. We're close. So keep an eye on that. We're right inside this volume by price congestion level. Let's look at the weekly. So we can see the weekly has support here at this volume by price support level, and the 50 period and the 20 period moving average. Slow stow is also moving higher, and MACD is above the zero line. So if you are bullish equities, you want to see TLT trail off and move lower. If you're bearish equities, you want to see TLT continue to move higher until this positive negative correlation ceased to remain. The risk on trade with junk bonds also had a similar move as the S&P 500 and SPY as it bounced off of these low levels. But we are at the 50 period moving average. Notice the rejection there. We still see this descending pattern, so we don't have higher highs yet. So just keep that in mind. Nice volume last week. We are overbought on junk bonds, the high yield. Remember, there is about 25% to 30% in the junk bond ETF that apply to the shale companies. With oil prices continuing to move higher, that'll bring some of them out of the red zone and could enable junk bonds to continue to move higher. So just keep that in mind going into the week if you're trading your junk. The LQD investment grade corporate bonds are also moving higher. You want to keep that in mind. If this continues to move higher, you could see lower prices on equities. And of course we want to look at commodities with the dollar trailing off as we showed earlier. You'll see copper and other commodities moving higher. Note that copper is in this Kirby zone now. If you watch the video that we uploaded to the Premium Videos site on the blog, you can understand why this is working and why we could see higher prices. Note the 10 EMA is passing up through the 50 EMA and the Bollinger Bands are fairly tight. Note the volume and MACD is above the zero line. STO is in the red zone. Unleaded gas looks like we're forming a base here. The 10 EMA could cross up through the 50, so keep an eye on that. Gold had a nice week as well. Looks like it's trying to move higher out of this triangle pattern. We have overhead resistance at this volume by price bar. And of course, oil continues to move higher. So much for the Goldman Sachs call that we're going to see $20 a barrel oil. Bollinger Bands are expanding. We have the 10-period EMA above the 20 and the 50. We have this volume by price congestion level. We could see higher prices here. STO is overbought, and MACD, the histogram, is starting to trail off a little bit, so we could see a little bit of consolidation here. Just keep an eye on the US dollar as well, as higher oil prices have seemingly supported higher prices on equities. We see a spinning top at the upper Bollinger Band, and we'll watch this going into the week. We want to look at sectors from the perspective of catalysts. If you've read my book, you understand the powers of observation, that we need to keep an eye on things that would impact price action on the indices in particular, and also on the individual sectors that we might be interested in trading. We can look at all of these sectors with the exception of XBI, and in so doing we can see that all of these are overbought with the exception of XBI and XLV. So these two work together and could see a little bit of higher prices. However, the multitude of other sectors are showing more bearish indications. Just means that we could flag out a best case scenario, or we could see a little pullback to the rising 10 EMA on all of these sectors as well as the indices. So just keep that in mind. Okay, so let's look at the IBD 50. Google is now under the holding company Alphabet Inc., which you're probably aware of. Note, connect these highs. We could break above that level. That would be bullish. Slow STO is overbought, and MACD is above the zero line. AmTrust and XLF sector components continue to move higher. However, remember, they're overbought. So I'd look for, with the spinning top, possibly a pullback for an entry with a 10 EMA STO MACD setup working in your favor and not chasing here. Best case scenario, it flags out and the 10 EMA catches up. This is sort of what we're looking for. Note the volume by price band here. Price flags out, the 10 EMA catches up. We'll have a nice 10E STO MACD setup. If STO gets back down below the 20 or even the 50 and turns back up, that would be a great sign. Note, we are in earnings season, so all of these stocks need to be checked for earnings dates. Blackhawk, note the long-legged doji way outside the upper Bollinger Bands. At these previous highs, volume by price congestion over here. If it gets above that level and stays up there, we could have a gap and go situation. But remember, EPS dates, want to check those. Slow STO in the red zone. MACD is moving higher. Lots of volume. Looks like this could continue, but I wouldn't chase it. I'd wait for a flag instead. CDW, same situation. Wait for a flag. MACD and STO in the same situation as the previous stocks. Cadence Design, attacking these highs. Bollinger Bands are expanding. Slow STO in the red zone and MACD above zero. We're looking for volume as well. Check earnings dates. Cal-Maine tried to break out inside of the volume by price bands back to the 50-period moving average. Nice volume. Slow Stow is resetting. MACD is trying to turn back up as well. Keep an eye on this one. This could bolt this week. It might be a good retracement back up to the 60. And once again, check earnings dates. Celgene, a lot of resistance overhead. Note the lower highs, the 50 overhead, the 20. And XLV, remember, and XBI, IBB, the biotech sector, and healthcare. Need to keep an eye on those. Those are the only two sectors that were not overbought. They were rising. The rest of the sectors are overbought. Chipotle could move higher. Consolidation around these highs. Narrow Bollinger Bands, the 10 EMA, price above, volume by price, as well as Slow Stow moving higher and MACD above the zero line. Cirrus Logic and chips getting rejected at the 50-period moving average. Note this reverse Kirby. Stow down below zero and MACD dropping below the zero line. You want to check out the videos I uploaded to the Premium Videos tab on the blog site for why you wouldn't want to trade this right now. We're looking like we're headed for the lower Bollinger Band, and these two could expand, upper and lower, and drop down into this reverse Kirby. XLK, the technology sector, some of these stocks continue to move higher. Note Cognizant, CTSH continues to move higher. I would like to see a little pullback, a flag, like I was mentioning on the other stocks for an entry. I wouldn't chase, obviously. We have this upper level previous highs that we want to take out. Slow Stow in the red zone and MACD moving higher on higher volume. Same thing with Constellation Brands, STZ. Doji outside the upper Bollinger Bands. This one's likely going to pull back. Note both upper and lower Bollinger Bands are expanding. That usually means quick acceleration in prices. We would anticipate, though, that we would see a pullback to the rising 10 EMA first, rather than chasing something like this. Slow Stow is above 80 and in the red zone. MACD really had a rip-roar move last week. CyberArk showing resistance at the 50-period moving average. We have the volume by price resistance overhead as well. Stow is moving lower. Maybe wait for a better setup on this one. If it continues to flag out, maybe it'll push through and get squeezed between the 10 EMA and these other moving averages and pop out through those. Remember to check earnings. Dycom Industries, technology in the XLK sector, overbought sector. Maybe this pulls down a little bit. We have a doji on Friday. Still in the red zone. MACD histogram is starting to put in shorter bars. Maybe you have a better setup for this one. All of these stocks on the IBD 50 have good fundamentals. Edwards Lifesciences showing why high beta stocks can really screw up your account if you don't know what you're doing. A rip higher from 133 up to 154, 20 points in a week. Then a rip back down to 50, 10 points lower, the 50 moving average, and then now bouncing higher again. Stow's turning back up, MACD's turning as well. So this one might rip back up to the 154, 159 level this week. EPAM showing what we're looking for, starting to flag out here at the upper Bollinger Bands. TNME is catching up. We have volume by price support below. Stow needs to possibly move down to 50, turn back up before we get interested. And we're watching histogram. Note histogram is tapering off here. That's an early sign that we could see more of a flag and a little bit pullback to like the 78 level for an entry. Equifax new on the list for the second week, I believe. Nice rip higher. Bollinger Bands were squeezing and then we ripped higher. As we pointed out in the Bollinger Band Keltner TTM squeeze video that we uploaded to the premium site as well this weekend. Facebook, another one to keep an eye on. We still haven't put in a higher high yet. We have this volume by price band to deal with, as well as the Bollinger Bands. Stow's tapering off the red zone. MACD is trying to stay above the zero line. Nice volume. Not willing to chase this one just yet. Watching how it consolidates over the next couple of days. And remember to check earnings on all of these IBD 50 stocks. Foot Locker, a good name. Having problems here at the 50-period moving average and this volume by price congestion. You can always tell when price action is sluggish that MACD is typically below the zero line. We'll always keep an eye on that. Slow Stow is moving higher, however, so we have possibly 2 out of 3 of the 10E Stow MACD setup. So keep an eye on this week and check earnings. Global Payments, we talked about this one over the last couple of weeks. A new entry about 3 or 4 weeks ago. Moved above this volume by price level. You can see what happens when it hits the Kirby. Prices just rip higher. Bollinger Band squeeze to boot. 10E Stowe MACD setup. Beautiful, beautiful setup. Huge volume. And this name just ripped higher from 120 breakout level up to 132.50 for a nice $12 gain. Hawaiian Holdings, a little bit of a surprise. Nice pop. Got out of this consolidation zone, moving higher despite higher oil prices. MACD above the zero line, slow Stowe pushing back up. Pocket pivot right here. Pocket pivot is when you see a green volume that exceeds the previous 10 days red volume. That's usually an indication that institutions are picking up shares. In this case, we could also see short covering on top of that. Icon, PLC, ICLR, down below the 10 period EMA. 10 period is below the 20 and the 30 and the 50. Remember, that's usually an indication for shorts only. Moves higher, you're trading counter trend, and we're right at this volume by price band. Slow Stowe turning up. MACD's below the zero line. You know the odds of a positive trade when that's the case, so just keep an eye on it. We do have a MACD cross, however. Inogen, INGN, new on the list. I'm not sure if it's just this week or last, but we're holding at the 130 period EMA, volume by price, support level. We had some selling last week. Looks like somebody's stepping in trying to buy shares, but MACD is below the zero line, so just keep that in mind if you're interested in trading. Odds are that we could see lower prices and consolidation around this zone first. If it drops down below this volume by price band, that could be a bad sign. Note the 10 EMA is below the 30 and the 50. Jack Henry, JKHY in the financial administration, XLF sector. Note that it got above this volume by price resistance and it popped right out of there with volume stepping in, and also the Bollinger Band's expanding on this thinly traded stock, 186,741 shares. MACD above the zero line, all looking bullish. Just want to see Stowe reset again and price come back to the 10 EMA, or at least flag and the 10 EMA catch up for thinking of an entry on this stock. LGIH, Homes, Mikey was in this one a few times, doing quite well on this one. Congrats to Mikey. Note the volume that came in last week. Slow Stowe is now overbought. MACD is up in that zone. Histogram is starting to taper off. That just means we could probably see a flag here and the 10 period moving average catch up on this relatively inexpensive stock at $30 per share. Might want to consider this one if it flags out and the 10 period EMA catches up again. Manhattan Associates looking interesting above all the moving averages. Note the tight Bollinger Bands, and same situation as some of the other stocks that broke out and ripped higher. Slow Stowe is drifting higher, MACD above the zero line. All the ingredients of a possible breakout trade. Just check earnings. Mentor Graphics breaking higher, same thoughts as the previous stocks. Wait for a pullback. MACD histogram moving lower, Stowe in the overbought zone. NetEase looking constructive. I'd like to see a pullback first. Volume by price resistance overhead. It'd probably pass on this one until it can make it consolidate some more on this particular name. Nike looking bullish, very near the 10 EMA. I like this one better in terms of its proximity to the 10 EMA. Note the volume in this volume by price bar. Stowe turning back up, MACD positive. This one looks like it could go this week. Noah ripped higher. You can see the 10E Stowe MACD setup, volume by price, Bollinger Bands, all of these different things we have in the strategy videos that we uploaded to the premium videos tab on the blog. Just check those out and you'll understand why these type of setups work and how you could have caught this move here from $23 up to $27 for $4 gain as we broke above this volume by price band. Public storage flagging out. This is what we like to see, and then a move higher. Stowe get reset, MACD turn back up, histogram goes positive. Regeneron trying to move higher. Remember XLV, IBB, and XBI all supportive. The sector's moving higher, so this one could move higher. We're going to have some resistance overhead, however, with the moving averages. Nice volume. SS NC Technologies looks like it's going to try to break out as well, turning back up. Stowe, MACD's positive. Looking pretty good on those. Signet Jewelers, remember Christmas is around the corner. Perhaps this one breaks out as well. Of these recent highs, Stowe is in the overbought zone. MACD turning back up, crossover and above the zero line. Smith & Wesson drifting higher. AOS Smith AO Corp. Nice little flag here would be nice, and then a push higher. Stowe in the red zone, MACD above zero. Starbucks, you know I love Starbucks. This one's just going to continue to move higher. Note there's very little overhead supply up here as we continue to break out. Bollinger Band's tight, price above the 10 EMA. That was a 10 E Stowe MACD setup last week, as we pointed out. Continues to move higher. Tesoro probably going to grind higher. Note the lower Bollinger Band's turning up. That typically means price is going to flag and then continue to grind higher. Just keep an eye on all these nuances, as we point out in the book and the premium video series. Tight Bollinger Bands on TSS, Financial Administration. Bollinger Bands should expand, no overhead supply above the volume by price. Stowe is overbought. Like to see this push back down. MACD stay positive and get a nice setup on that. Tractor Supply continues to move higher. Not too far off the 10 EMA, only a couple of points, but still I'd wait for a pullback and a flag and Stowe get back down to the 50 at least. Ulta, nice little triangle diamond pattern here. Should press higher, get above the volume by price level. Stowe, see I like when Stowe does this, moves back down. Let's price action consolidate a little bit, and then we push higher. Bollinger Bands expand, blow out, and we see a breakout. Wait for this one to pull back. Visa, need a flag here as well. Remember XLF is overbought. And that does it for the IBD 50. Okay traders, so that's going to do it for me for the weekend video. This is Cousin Vinny coming to you from theclosingprint.com. If you're a new trader, check out the blog. You can enter your email in here. This is a spam-free site. This is free. In addition, we have the premium tabs over here for the book. If you're not familiar with our style of trading and want to get quickly up to speed, you can buy the book. It's fairly inexpensive. It consolidates 27 years of investing experience. I guarantee you it's worth the money. And of course the premium videos would help support the strategies therein. We uploaded a number of videos this weekend. The 10 E Stowe MACD setup, the Bollinger Band Keltner TTM squeeze, and the Kirby using volume by price. So check all those out. It'll help you with your trading. It will increase your odds of success and the number of winning trades going forward. Take care. I hope this helps. We'll see you on the stream on Monday.